In the last 2 months, we've seen fear take over the market, reaching a low of 20 on the Fear and Greed Index. At Crypto Insight, we see this as a great buying opportunity, even being able to anticipate the last final trap. Then, shortly after, U.S. President Donald Trump announced that the president's working group on digital assets has been instructed to include XRP, Solana, and Cardano in the U.S. Strategic Cryptocurrency Reserve. Bitcoin and Ethereum will also be part of these reserves, with Trump set to host the first ever White House summit on crypto assets on March 7th. These events led to a massive surge in the crypto market on Sunday, with an explosion in prices and widespread excitement. We're also seeing a significant increase in the number of active addresses, breaking the highest levels of the past 3 months. So, does this mean a new bullish trend for the crypto ecosystem? Well, it's true that over the past 2 months, the market has been in a state of extreme panic. In other words, it has been deeply entrenched in fear, especially if you pay attention. In this latest bearish attack on Bitcoin's price, we've seen the Fear and Greed Index completely collapse to extremely low levels, signaling that the average retail investor is full of fear. This creates a context and opportunity that major institutions can take advantage of. It would be a huge mistake to analyze the Fear and Greed Index thinking that when greed is high, the market is positive, and when greed is low, the market is negative. The reality is quite the opposite. In this fearful context, we're looking at Bitcoin's chart on the daily time frame. As we mentioned, this bearish move is what has pushed the Fear and Greed Index below 20. This has given large institutions an environment where they know the average retail investor is likely to sell into the market, believing that a complete black swan event is about to unfold. Honestly, as of today, we don't know exactly what's going to happen in the market. But what we do know is that at Crypto Insight, we had already been anticipating this aggressive bearish climactic action. Through cross-technical analysis, we could see that this scenario made a lot of sense, and in the end, it actually happened. After that, we mentioned that there was a great opportunity to buy the trap near the defense zone. And later in following videos, we also pointed out that the trap at that low was another buying opportunity. In other words, this was a buyable move because everything indicated that the price had to go up despite the market's fear. So for the entire crypto ecosystem, we're now at interesting points to look for buying opportunities. But what else should we consider? Assets could still drop a little further, so it's wise to make partial purchases. For example, in Bitcoin, one could buy at this moment, and if the price drops to a certain zone, the position can be averaged by buying again to secure a better overall entry price. This example I'm giving you with Bitcoin can be applied to your favorite asset as well. The idea is to recognize that we're currently facing a market trap at an extreme level, one that could lead to an upward movement in the mid to long term. Now that you've seen how, through the advanced technical analysis we conduct at Crypto Report, we were able to anticipate a deceptive market event, let's shift to the 1-hour time frame and break down the key catalyst behind the aggressive and impulsive market move that took place yesterday, Sunday, at 4 p.m. At that exact time, Donald Trump, who is positioning himself as a strong ally of cryptocurrencies, posted on the Trust Network that the U.S. Digital Assets Task Force had received instructions to include XRP, Solana, and Cardano in a strategic cryptocurrency reserve for the United States. Now you might be wondering, what about Bitcoin and Ethereum? Well, don't worry, because later that day, the president confirmed in another post that both Bitcoin and Ethereum would also be at the core of the U.S. cryptocurrency reserve. But yes, it looks like everything Donald Trump had been promising regarding crypto assets is actually coming to fruition. And without a doubt, this is great news for the long-term future of crypto. I think we can all agree on that. In fact, Sunday's announcement was the key trigger behind this massive market surge. At the end of the day, it was a catalyst that investors reacted to by aggressively buying cryptocurrencies, which is completely normal. But as you know, these kinds of news events serve as catalysts for price movements, and we need to stay grounded and understand the bigger picture. This sharp upward move, following Trump's announcement, is undeniably important and very positive in the long run. That catalyst could have been used by the market in different ways. In this case, they chose to react with a surge, which honestly doesn't surprise us at all. After all, we had been expecting an aggressive bearish climactic action in Bitcoin, possibly even a final trap, before institutions could set the stage for the real move they're aiming for. So, while this news is bullish in the long term, remember that in the short term, it didn't necessarily have to trigger an immediate positive reaction. However, considering where we've been and where we're ultimately headed, it makes sense that the market responded the way it did. And there are several key aspects to consider here. Take a look at how, after the news, Bitcoin moved to retest the origin of a major macro structure breakout. Now the market is deciding whether this is just a test of that level before a complete breakdown, turning this catalyst into nothing more than a trap. And honestly, that is a real possibility. One thing is for the news to be positive in the long run, but how it gets used in the short and medium term is a completely different story. In the immediate short term, we've already seen it push prices higher, but in the medium term, it's still unclear how the market will use it. It could continue driving prices up, or it could be leveraged for a pullback. What we do know for sure is that, in the long run, This development will ultimately favor Bitcoin's price. But we're not talking about the long term here, we're focused on the next move. Now, I don't want you to get confused. I'm not saying the price is going to drop, not at all. In fact, quite the opposite. What I'm trying to highlight is the importance of this structure. Just as I'm telling you that this could be a key level for a potential downward move, I'm also saying that if this level is reclaimed, tested, and confirmed, I can almost say with certainty that it would push us toward new all-time highs. What we're looking at here is a pivot structure. That's what I want to get across. And since we don't have a crystal ball, what we need to do is analyze how we can interpret and manage our long-term strategy based on how price action reacts to certain structures. I'll explain that now, but first...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Let's take a look at Ethereum's daily chart. Here we can see the macro defense zone that allows us to remain optimistic about this crypto asset, even though the market has experienced a massive drop of nearly 50%. And that's precisely why the average retail investor is feeling scared. But for now, what are we seeing? Ethereum hasn't broken its structure. Instead, it just completed a climactic move following its impulse, channel, and range, ending with that final climactic action. And this is exactly why, in the long term, we remain positive about the crypto ecosystem. Now, take a look at XRP on the daily time frame. Here we have its key defense zone, and we can see how the recent bearish attack came down to test this structure. Then, we got the impulsive move following Donald Trump's announcement about the U.S. Strategic Crypto Reserve. And right now, the market is negotiating the break of the creek. At first glance, this creek breakout seems to have failed, but that's something we'll have to watch closely. I also want to show you a more advanced indicator for XRP. This is a defense zone, and as long as this structure holds, there's a real possibility of a strong bullish move in the medium term. And let's not forget the key move we're seeing in Solana. That bearish excursion toward its defense zone is crucial. In fact, it could represent the boundary of a potential trap within the macro structure breakdown. We place great importance on these kinds of events. And right now, what's happening, just to show you how crucial this is an attempt to reclaim the structure. If it succeeds tomorrow, this could be a strong indication of a highly favorable medium to long-term outlook for this crypto asset. What I'm trying to tell you is that, based on what we're seeing in the market, cryptocurrencies should be viewed in a positive light. In fact, when it comes to Solana, there is nothing on the chart today that suggests we should be bearish on its price action. Now, let's look at XLM, which provides some very relevant information. We've been closely tracking this downward channel, following an impulse that led to a staggering 640% increase in this crypto asset. Within this same downward channel, we've also been monitoring a wedge formation. And as we've discussed in previous videos, we viewed this wedge as highly favorable and very positive. Now, if we zoom into the 4-hour time frame, we can see that trap below the defense zone, the key level and structure, where we could look for long positions with a long-term perspective. And even more so if a trap was forming. Just look at these key levels we had been studying and considering for long-term positioning. Because the breakout of a wedge will always happen with strong volatility. And what a coincidence, right when this happened, Donald Trump's tweet came in, acting as a catalyst, and price moved straight into a key structure. A structure that must always be tested and reacted to accordingly. So, the behavior we're seeing in XLM, absolutely no surprise to us. And if you've been following Crypto Insights videos for a long time, I'm sure it's no surprise to you either. Because even though it might seem hard to believe, especially for those who are new to this, the market is not random. In fact, we dare to say it's deterministic. That's why in our videos we share our analysis of what we believe makes the most sense for crypto price movements going forward. And I think it's fair to say that things are working out pretty well for us. So, looking at XLM, ideally we'd allow it to drop into this defense zone at some point. It could even dip lower if the market wants to put more pressure on the wedge structure. But if we see this kind of movement, there's no need to panic. If a quick and strong recovery follows, there's a high probability that the future creek breakout will be genuine, setting us up for an upward move. At that point, we'd start considering what could be a major black swan event, one of those that truly matter. And one thing is clear, just as we can allow XLM some downside movement, the same applies to Bitcoin and the rest of the crypto ecosystem. In fact, I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on and what they're looking for. in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. Signing up is very simple. The requirements are as follows. You need to be a user of BitUnix or buy DFI. Have deposited cryptocurrencies into your BitUnix or buy DFI accounts with a minimum value of $100 and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. Don't miss this unique opportunity to become part of our exclusive Crypto Insight Premium community. Come join us. We're waiting for you. Like I was saying, we can give Bitcoin some room to drop, but ideally it should hold around the $87,000 level. We can accept all of this as a trap. Sure, we can allow a test of the defense zone, but after that, we're going to demand that price moves up, because if it doesn't, then maybe we should start reconsidering whether this entire move, triggered by Donald Trump's news, was actually just one big trap, and that wouldn't be a good sign for the short to mid-term outlook in crypto. One thing is crystal clear: nobody knows exactly what will happen in the short, medium, or long term, but what we do understand is how price reacts based on certain key structures, and that's where the biggest investment opportunities are born, just like the ones we've been discussing in the latest video. Now tell me, are you bullish or bearish on the crypto market? Let me know in the comments. And if you enjoyed this advanced technical analysis, don't forget to like the video, subscribe to the channel, and hit the notification bell so YouTube alerts you when we post new content. Good luck with your trades and see you next time. Subscribe now. Don't forget, do it now, subscribe.